When you start looking into investing, you right away hear about stocks, bonds, and cryptocurrencies. But as you keep exploring, you perhaps bump into one of Dave Ramsey's videos and hear about mutual funds, index funds, and ETFs. And then it gets confusing and you don't know which one to pick. So let's dive into what these three investments have in common, what sets them apart, and of course at the end of the video, I'll give you the funds I picked for myself. Now imagine this, you and your friends decide to pool your money together and buy a property that generates income and goes up in value, and then you guys all share the profit. Well, essentially that is exactly what these three investments are trying to do. These are pools or baskets of tens or hundreds of stocks that when you buy one share of that ETF, for example, you automatically invest in each and every one of them. So you become the owner of a small portion of each and every one of underlying assets. So basically, that's the thing that they all have in common. They're a mix of various companies and businesses where you invest your money and watch it grow. Now let's get into details and see what makes each of them unique. Let's start with mutual funds. What sets them apart from ETFs and index funds is primarily their management style. They're actively managed, meaning that there is a dedicated fund manager who handpicks the stocks and make investment decisions on your behalf. With mutual funds, you benefit from having an expert actively trying to maximize your return. However, they also need to be paid for their work. That's where management fee comes into play. Typically, mutual funds charge an annual fee ranging from 1 to 2% of your investment amount. So regardless of how your investment performs, you'll be paying that fee anyway. Now, that's actually the advantage of ETFs and index funds. They have incredibly low fees that can be as low as 0.1% or sometimes even less. That is quite a difference compared to mutual funds, which can be 10 or even 20 times more expensive. And the reason for this incredibly low fee is that both ETFs and index funds follow a passive management style, meaning that there is no fund manager handpicking stocks on your behalf. They both follow a specific market or index. So for example, if you invest in the S&P 500 index fund, your investments covers the entire S&P 500 and you automatically become the owner of the small portions of the whole 500 companies. Alright, now that we addressed the high fee issue of mutual fund by bringing ETFs and index funds, how these two are actually different from each other. They are both basically a collection of stocks and they both use passive management style. However, the difference is in the ET of ETF, which stands for exchange traded, meaning that ETF shares can be bought and sold on exchange similar to the individual stocks. This exchange traded nature of ETFs brings you the flexibility and freedom to buy and sell ETF shares throughout the trading day. Unlike mutual funds and index funds, which are typically priced once a day after the market closes. But because ETFs are traded on an exchange, your broker might charge you a commission fee for buying and selling ETF shares. So when it comes to the total fee, ETFs come second after index funds, but are still far cheaper than mutual funds. Another advantage of ETFs over mutual fund and index funds is that you can use fractional shares, which means that you can start investing with a very small amount because you're not required to buy whole shares. So for example, imagine that ETFs cost $300 and you only want to invest $500. You can buy one whole share and 2/3 of another share. Another important difference between these three is their level of transparency. A mutual fund, due to the different regulatory requirements, are only obligated to report their holdings on a quarterly basis, unlike index funds and ETFs, which you can have access to the assets they own every day of the year. Alright, now that we went through what these three investments have in common and what sets them apart, here's my short-listed funds. I did quite some research to shortlist these ones, so let me know if you want me to have a quick video to summarize why I picked these ones.